think everyone on this panel is very keen to encourage innovation and maybe to allow some lighter requirements where that would be proportionate in the sandboxes and so on. But ultimately, we still need to ensure that on things like AML, on cybersecurity, on data privacy and so on, that the standards are there in the fintech sector in order that we can establish those partnerships. So any ideas from the panel around how we can drive up standards in those areas in the fintech sector?
It's a very good question about standard. And personally, I believe that the involvement of fintech in the next several years is mainly about in different subsectors, how you create standards. For example, we see that now there are a lot of solutions coming up related to trade finance, supply chain finance. There's no standard in the market at this moment. So large banks, you do have advantages basically to drive the standard. But at the same time, I think this is the role of multilateral development banks and also the regulators to really think about how to make sure the inclusion is built into those standards. For example, you mentioned about KYC. To bank those unbanked, one major step is, I think, is KYC. Of course, with the technology, now eKYC is a kind of commodity in the market already. You can easily get a lot of solutions. But coming to those really bottom of the pyramid, actually it's not that simple. If you build a standard which is very complicated, for example, can we bring this solution to a market which doesn't have power? And if you go to really rural areas in the Pacific market, okay, KYC sounds like a good idea, but for example, does the local village has power to power the equipment to do eKYC? Or, if it's just like a mobile solution, has the mobile device being widely, distributed in the local areas? So that's why I say that the standard, when you set up the standard, we really need to think about different levels of the market. And so that's why we believe that for the regulators, for the development banks, they still have a larger role to play, to voice out, to build the inclusion into the standards.
Thank you. Pia, please.
And just on that question, Robin, I think with fintech and looking at this segment, the vulnerable, new to bank, new to financial system segment, there are some areas where you really have to be very clear on your expectation of your entities. And this is in cybersecurity, for example, and standards in terms of technology risk management. The second is, of course, in financial integrity, so AML, CFT concerns. And third is consumer protection. And so the Banco Central has very clear frameworks for this, a technology risk management framework where the expectations are clear, that they're also based on what your technology risks are. So it's not a one size fits all. It's really, as I have to emphasize, that it needs to be commensurate to your size and complexity and your business model. But there are some very basic prerequisites that need to be met. In terms of consumer protection as well, we also have that framework where, the basic standards of conduct on whether it's delivered through digital channels or a brick and mortar, in terms of protecting client information, in terms of having an effective redress mechanism, transparency and disclosure. So these are very basic principles that you can tailor at different degrees, and that is where the understanding of the regulator of the business model really comes into play. But the challenge here is when you see that there are different players, and you don't want arbitrage, and you don't want also to have lack of trust in the system where one player will do this and one player will do that. And so we're really looking at collaborating across regulators insofar as looking at what is the activity of that certain institution. So more and more this activity-based approach is becoming relevant when we see the blurring of the lines in terms of the types of institutions that are in the market. So those are things that are in the pipeline. But as again, there's very basic standards that you have to ensure that the providers comply with.
Thanks very much. Mahmood, any comment on this one?
I'll just get along and add to this. The simplicity part and the complexity part has to go hand in hand. Money transfer from a hand to another cannot disappear. Whether it's $20 or $100 million, it just cannot disappear. So there has to be traces down. So I guess there's going to be a challenge for the fintech. Fintech will want it with no standards because that's the easiest way to reach the furthest. But then while we're talking about inclusion, we must also keep in mind that there could be limitations and there could be limits on transfers on standards of KYC. See, in Bangladesh today you have eKYC, so a person does not have to do anything. We all have got something called a national ID card, which has gone down to every voter, and every deep-rooted rural person has it. So that with a database can be mapped for your real true identity. So I think my suggestion would be to it is if we set capping, and banks have limits to who can do what, and then allow people to be reached, because that inclusion does not mean the larger ticket. So for people who need larger tickets, you have to have a lot more KYC and a lot more clearance. Second thing is, we've also got to have a mindset in saying that what is a standard? And like you said, standards will not be there in one day. How do you set standards? So I think this is something which the world will have to take a look and go forward. And standards will be set by somebody, and that will be followed.
Thank you. So I think we have a sort of consensus that we need the standards to be there, but at the same time for their implementation to be proportionate to the level of risk of the activity involved. I'd like to switch tack slightly and ask about remittances, which was an example given by you, Heidi. I think it's very significant in this region. It's a very significant source of income, I think, for the Philippines and for Bangladesh. But when you look at the cost of remittances, it's actually been quite resistant to innovation. It's actually 10 years ago today that G7 and later G20 leaders pledged to halve the cost of global remittances, and they had pledged to do that in 5 years, and 10 years later we're only halfway there. So the cost has been coming down at a quarter of the rate that the leaders called for back then. So I'd like to ask the panel, why is this such a sort of difficult area to bring costs down? And also, do you see any promising breakthroughs on the horizon from the latest wave of innovation and partnerships? Anyone can take that.
I'm a little distracted with all the questions.
We have the audience questions coming in, so we'll go to those after this round.
Maybe on the we say BSP a lot in the list. So sorry. So definitely remittances. I think we cannot emphasize the importance. Emphasize enough its importance in the country in terms of just the number of our overseas Filipinos and the volume of remittances that we receive. I think the cost issue, and there's actually been a lot of progress in terms of bringing the costs down. I mean, right now, I think the average is about, according to the World Bank, about 4.7%, which has met the 5% previous target, but it's now 3%. So I think that's a good thing that we keep on trying to challenge ourselves. This has been addressed because of the multiplicity of players. There's just more options. There's more last mile options, and definitely technology will play a role in bringing those costs down. But I'd like to refocus just this remittances question on another aspect, which is what do the recipients do when they receive the funds? So I think a lot of the thinking has already gone through going cross-border and getting it to the last mile. And I think a bigger issue is that when the remittances are received, whether they are, since if they're received into an account, whether that account is really productively used for other digital financial services, or if you make purchases through the account, if you now develop some kind of history and maybe can access some kind of financial products from financial institutions. So I think this is where things are still very nascent, but can have much more potential in really ensuring that remittances have that multiplier effect in really improving the welfare of the beneficiaries. And I think a lot of the new technologies have very good promise in that respect, and we're looking at some pilots in this area, and I think this is where a lot of our attention should focus on an actual on the beneficiaries.
Maybe I could just add to that as well, because we are also doing quite a bit of work on remittances and partnering together again with some fintechs. I think it's really interesting also because I think when a lot of the fintechs initially came out and started to focus on financial inclusion and addressing remittance space, the cost did not go down, to your point, right? So in fact, in some cases, the cost actually increased versus what banks were charging. So I think that there's a really, it's an important example to take a look at when you think about the end consumer of who's actually transferring that money and how are we supporting them and ensuring that that money is safe, right? I think that's another, an element here that doesn't get discussed as often as it needs to be, because when a lot of individuals start to use wallets, not all of those wallets actually have insurance that protect the money that sits in there. So they don't actually realize that they're taking counterparty risk in some of these situations. So this is an important part of the work that really needs to be discussed further around how are we protecting that end consumer, but also facilitating those flows much faster. I do think that there's some technology that will come along in the next 2 years that will allow us to say that we've actually solved for this. And we're evolving it quite quickly, but I think that there's also a risk that without deeper connectivity and collaboration on this, that there could be a big challenge in this space as well.
Thanks so much.
Yeah.
Mahmood, please.
Yeah, you'll have some good insights on this.
Somebody just said speak loudly, so I guess.
Can you hear this one? Yeah. This is much better. Yeah. If you really look at the thing, there are two things a remitter and requires is speed to delivery and cheap, how cheap can it be made. You see, in Philippines, I've been in the remittance industry a bit and understanding, because I right now chair a API out of UK. Filipino tickets are higher because their job levels are higher. But if you look at Bangladesh, India, Pakistan, Sri Lanka, Nepal, the tickets are much lower. So how do you reach them? Now, there are many methodologies have come up. Banks are tying up with MNOs there, and with you see, MoneyGram, Western Union were the first tie-ups. They're expensive. They have a minimum of $5 per remittances. Now, for a $100 remittance, we're giving a $5. So we have found out routes where there are money agent, money transfer, KYCs. The last leg when it comes in, a bank-to-bank delivery gets expensive because it's brick and mortar. If they're using Rocket, Bcash, iPay, or whatever, there are many others, there are probably 14 of these MFS that works in our country, who doesn't have that much of a network. If the beneficiary is cashing out, there's an expense. If you're keeping the money on the electronic thing and using it for other things, which is now your electricity, your water bill, your government taxes and everything coming within it, then it is actually much, much cheaper that we have created the remittance to come in. Sorry, Robin, I think
Excellent. Excellent. So we've covered both the cost angle, but also how to leverage remittances for broader inclusion is very important. So looking at the questions you've been sending in, so perhaps reflecting the fact there were so many Filipinos in the room, I think the first 3 are actually specific questions for the Philippines, and then the fourth one is for Bangladesh. So Pia, I'm going to direct those top questions to you. So the first one is how the BSP is going to manage risk, innovation, and financial stability whilst it's pursuing the goal of reaching the unbanked. So how do you get that policy balance right? And then the second question was also in the Philippines mindset, has been mentioned. So how can we encourage people more to use new technologies, such as money transfers, when there's issues around trust in banking, unauthorized withdrawals, fraud, etc. So how do you manage the trust in digital? And then the third question, oh, it's just disappeared from that screen, but it's up behind. Oh yes, how can you protect in the Philippines the marginalized, especially farmers and the poor? So it's the balance in terms of financial stability, the consumer protection, and then again the issue of trust and culture.
Thank you for that. I'll split that into two, combine the first two questions. I think that's overall balancing our policy objectives. I'll highlight one thing, and it's the importance of data. The Banco Central has been very focused on trying to understand the market. We have a regular financial inclusion survey. Because why this is important is that we are very evidence-based in our approaches into what we will promote, where the gaps are, and what policy needs to be in place. And that's how I think we are balancing the needs of the market and having really more responsive regulations. And it's the same way with data, and I think you mentioned it earlier. I also handle the consumer protection department in the bank, and this is where we get also all the complaints. So all these unauthorized transactions, and we get the question, you're pushing digital, and yet there's a lot of these things happening. And so what we're really strengthening within the BSP is we're using an AI chatbot with natural language processing and machine learning for us to even gather more of that customer experience, really see where the pain points are, what the business practices are, what is consumer sentiment, and hopefully that will now inform our policy. So far that kind of evidence-based approach has determined, for example, for digital inclusion, a policy package that we have recently put together, for example, when we see, okay, we're looking at digital for inclusion, but 70% don't have accounts. So no matter how sophisticated all these new technologies can bring in terms of bringing down costs and increasing efficiency, it's not meaningful for anyone without a store of value. And so this is where we have like a basic account framework, a cash agent framework, bringing ubiquitous touch points to the people, and then a national retail payment system where maybe it might make, it might incentivize people to want to open an account because now they can do many things with their accounts. So that kind of data-driven interventions is really where we are anchoring a lot of our initiatives.
So we can actually employ the technology to try to build that trust as well, kind of use the tool on the regulator's side as well as on the private sector side. I think the next question that we have is regarding Bangladesh. So I'll direct that to Mahmood, and the question is, aggregators with inbuilt financial literacy for comparisons can assist customers in financial inclusion. So the question is, what is the state of play of third-party aggregators in Bangladesh today?
Thank you. This is something yet to grow. What we are doing, the aggregating business, is actually getting all the remittances coming into Bangladesh on an aggregator basis and taking the cost down. There will be aggregators arising out of the need. Still now the volumes are run by, it's like if you have a very large operator, it's a single party transaction that's going on. As smaller operators are going to come in, recently the central bank has just issued a notification saying that from 2020 January, they will get interoperability between MFS and banks. So aggregators will then get into aggregate the amounts to make it a single transaction so that it becomes cheaper on the banking part. But as of yet today, we are yet to see that business coming up. But as the MFS, the PSPs, what we call them is payment service providers. There are three different licenses: a bank, a non-bank, a mobile financial services, and a payment service provider. can interoperate between themselves, I think that need will also reduce in that space.
Thank you. I'm going to come to Heidi, I think, for the next question, because it's directed at banks and financial institutions. And the questioner is asking, should banks just focus on the back office, since that's where they have the expertise in terms of financial transactions, settlement, and so on, while fintech should focus on the front office, engaging the customers, the user experience? Is that the appropriate division of labor, or do you see it a little bit differently, perhaps?
Well, I think it depends on, you know, the market that you're operating in and your actual strategy. You know, in some markets we might have, for example, a retail presence where we are banking, but there will be places for everyone to engage. And I think that, and actually we do partner with a lot of fintechs to talk exactly about this, to say, how can we actually reach a wider audience, right? And how can you use the technology and infrastructure that we can offer to actually make it a very safe environment? And that is actually exactly what we did with Ant Financial, because those weren't clients of ours, those were clients of Ant Financial. But we facilitated that to make sure that the money was getting across in a much more robust fashion. So I do think that is probably more of a model that you will see going forward, because it will allow us to get to a much wider group. So it's us making sure that we can also help bring in those fintechs. And because I think a really important point that, you know, that doesn't really, why do we do KYC, right? Why is it that most banks actually have policies where they do not bank money service bureaus? It's because of the cash, right, that they get that comes in that we can't actually figure out where it's coming from, and most of our regulators don't like that. We need to be able to identify where the money comes from. So when a lot of people always say, you know, banks are a hurdle, but we're a hurdle because we're trying to protect the financial services industry, and we're trying to protect the end consumer, because there's still $1.5 trillion of illicit funds that flows through financial services every single year. And that's a big number. And so that's what we're trying to all, I think the more we collaborate on that, that will actually help us to facilitate getting the good banking practices out there and facilitate the flows in the way at a much cheaper level, right? And getting the money where it needs to go. I mean, if you think about some of the remittance flows, people really need us to make sure that those monies get to where they need to go. So for example, in the Philippines, I had some stories that were told to me where remittances they were trying to go fund some surgery, right? I mean, it was desperate that they got the money to the location as soon as possible, and every minute counted. And because the hospital said, you know, we're not going to actually allow you we're not going to do any surgery until we know that you can pay for this. So those are the types of things that we need to be solving for at a much more rapid pace that allows us to actually save lives and improve them, right?
Thanks, that's an excellent example. Sherwin, I'd like to direct two questions actually to you. I'm not sure if you have seen them already, but one perhaps from potential investees in the audience is asking about your risk appetite, what size of investments are you looking at, and so forth. And then there was a second question asking specifically, have you considered a pilot project for small island states in the Pacific? Because most of the examples we heard so far were sort of larger developing countries.
Okay. From ADB's perspective, you know, initially ADB Ventures will invest in early stage startups from pre-A to Series A. So which means that the company is about, you know, making revenues, has established a business model, has a prototype already, ready to like launch the business, but hasn't reached to a viable scale yet. And for those kind of companies, we would like to help them to do pilot testing, to do a little bit, you know, proof of concept in some areas, and then give them, you know, relatively small amount of money to bring them to the next step. So this is the risk appetite for ADB Ventures initially. We are going to expand. This is out of question. Then how to expand is really based on the market demand. If we see that in particular country or particular region or particular sector, there is a demand for ADB to support, then we will direct the money to that particular areas. So fundamentally, we're still, we're a development bank, so to meet the market demand and to fill the market gap is the #1 target. We try to not to lose money, but at the same time, if the project doesn't have development impact, we're not going to do it. The second question about whether ADB can do a pilot testing in a Pacific Island country, sure. And actually, we are working with one Chinese entrepreneur is doing a pilot testing in PNG. And this is about rural, it's not about fintech. It's a clean tech about a rural off-grid solar project in PNG. So sure, if there is a demand in the market, if there is a need, there's a suitable solution for that particular country, we are happy to support those pilot testing.
Thanks so much. Pia, there's been many questions on the Philippines, but I'm just going to pick out, I think, two that struck me. There was one question asking whether you considered virtual or digital-only banks here in the Philippines, as some other jurisdictions